The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the week ending 30 September 2022. Well, last day of the month. I'm recording this Friday, as I just said, at about 2:30. As you can see, the close on gold and silver. Gold was up slightly, silver was up slightly, and both platinum and palladium were off. We have seen a lot of volatility in all the markets, and of course, the big news is what's going on in the currency markets and the bond markets. Just finishing up this month's edition of the Morgan Report, which goes out this weekend, will go out tomorrow. And one of the keys is what I've talked about many times, that the debt markets, credit markets are what I call the keys to the kingdom, meaning that everything revolves around credit. And this is an article from Kitco that U.S. 10-year real yield hits its highest in over a decade. That should tell you something. The bond market has peaked. As I said, currencies vis-a-vis the dollar, except the Russian ruble, are all going down. And all this is to be expected. I've explained it several times on some of the interviews over the years, based on the extra pyramid and other factors. You can use the dollar milkshake theory. There's several reasons why. One of the primary reasons is liquidity and trust. There's nothing more trusted right now than the U.S. dollar, but you could counter that argument slightly and say, well, if it's trusted so much, why are people selling off, or especially nation states and entities, selling off the treasury market? And the answer is because they don't trust it, at least longer term. Interest rates will continue to go higher, in my view, in the U.S., and I do see a lot happening. I would like to say that one of the things you should do, or I suggest you do, is go to the blog on themorganreport.com and watch Crypto Conspiracy number 24. There's a lot of information there about the coming CBDCs, how it all fits together, and how rapidly it is approaching. These are vital things that you need to know, not even as an investor, as a saver, or just someone that's out there making a living. Anyone that follows this channel is well aware that silver has certainly not been performing as expected. With inflation being what it is, you'd expect both the precious metals to be moving higher. However, at the Silver Symposium, I forget which speaker it was, but it was pointed out, I think it was Jeff Clark, that there was a lag last time in the big bull market in the 70s to 1980. There was a lag between the CPI and the time that silver and gold took off. And actually, the lag was significant, meaning like over a year. I am not suggesting that. I am suggesting that we should be a little more patient. Regardless, this it came out recently in the Evening Standard, how to invest in silver. And obviously, I won't read the whole thing to you. What affects the price of silver? It's a function of global supply and demand with other precious metals and commodities. Well, that's only partly true. It's also the supply that's there and isn't there. In other words, how much the derivative market affects the price, and I go into that in this October issue. The LBMA sets the benchmark price in the United Kingdom. I think we all know that. Why would you invest in silver? Wealth preservation would be one of them. Inflation, which is not proven yet, but I believe it will here in the next 6 months. I don't think we have to wait a year. We may see, and I believe we will see, higher prices in silver, USD-based, dollar-based, by the end of this year. Safe haven status. Currency value is affected by economic policies around interest rates and the supply of money. However, the price of silver is a function of global supply and demand. This means that silver tends to be a popular safe haven during political or economic instability. Just check out the amount of silver that has been imported into India, and that will ring very, very true. Diversification, what most investors are not, because they're taught only to go in stocks and bonds. Certainly, in addition to cash, and you should be building your cash reserves in this environment, shares, property, and bonds, silver provides another asset to diversify an investment portfolio. Diversification helps to protect against the risk of one asset, such as shares underperforming. Disadvantages. Due to lower trading volumes, the price of silver is more volatile than gold. Absolutely true. It is difficult to hold silver in physical form as it can tarnish. Yes, it Anyway, and investors will also hold a relatively larger volume of silver than gold due to its lower value. Yeah, about 90 to 1 at this point in time. And volume-wise, it's even more than that because silver is not as dense as gold. How can you invest? Buy physical. That's what we recommend to begin with. Coins is preferred over bars. Initially, you can go to bars. Jewelry is really not an investment, but parts of the world it is, particularly in India and most of Asia. You don't have to pay a huge premium like you do in North America. Exchange-traded products. This is what really moves the market and has in the past. On the physical side, it can definitely increase the price or decrease the price depending on the flows. But more important than the flows into ETPs is what's going on in the derivatives market. Silver funds, there aren't really that many. BlackRock World Mining has achieved a return of 75%, investing in Glencore and BHP, and buying shares in silver mining companies. And this is probably the most overlooked, unwanted, and hated area of silver investing at the present time. There is a lot of opportunities here, but you are going to need a little bit of patience. In this issue, the October issue of the Morgan Report, we put out 4 ideas for options. Longer dated, they're called leaps. And this is a good way to get leverage in the silver market with minimum risk or less risk than you would, let's say, just going with a regular call option on a particular mining company or call option on a futures contract, or any of the ETFs, the SLV, for example, or the 2X and 3X, the SLV, they're long and short. I think most of these sophisticated investors know what I'm talking about. Let's try to keep it simple. We have 4 situations that we think are worth purchasing now, but the suggestion is to do it over the next few months. We will be hitting tax loss selling here fairly soon, October a little bit, November some more, and December usually we'll see a lot. So we could see a rally in the market, precious metals market, and then we could see a sell-off as tax loss selling accelerates. We'll talk about gold for a moment or two. This is from Business Standard. Despite price fall, domestic gold trading at a discount to imports. So this is in Mumbai. Talks about a $7 discount, and Mumbai, the elemental is going at a discount of $7 to $10 per ounce, where in other places it's $7. There's an arbitrage going on. And when this happens, it's usually done synthetically, which means it's done in the paper markets. Although, if it's significant enough, and at times it is worth moving physical metal. But there's going to be transportation costs, labor to stack the bars and then, of course, drive them or securely and then put them in another vault. That does happen, but I want to point out, in most cases, most of it is done in the futures market, not physically. Again, it does happen physically, especially if the spreads are really wide. 7 to 10 is probably not enough in most cases, but it's been wider than that in other exchanges. For those that follow the photovoltaic solar market fairly avidly, this is from PV Magazine. The headline says it all. The first terawatt of solar photovoltaics installed globally took some 70 years to achieve, while the second will likely take only 3. There's something in this October issue of the Morgan Report that is from Chen Lin, and it's very interesting regarding the solar market. Anyone that's really digs deep into the silver market probably will want to look into that. And by the way, you don't have to buy the Morgan Report to see that. You can find his speech online. It is available. Full disclosure, I did buy platinum this week. I saw this article after my purchase, but he and I agree that at this present time, that platinum is a low-risk entry point. And he goes through some technical work here, which obviously you have to pay for at Seeking Alpha. But the 850 level is pretty darn good for platinum, especially that it usually carries a premium to gold, which is about double the price of platinum right now. Not quite. And palladium certainly was on a tear. We caught that move, or most of it, but it seems to be falling off somewhat. It looks like the platinum-palladium spread will change, meaning that platinum will move higher as palladium stays neutral or moves lower. Platinum can be substituted for palladium, regardless of what you hear. And I do get the information from the Platinum Guild, which is a very small group, but very accurate in their projections. Again, I am long platinum in the physical market. No need to follow me in or out. Just want to let you know, from what I can ascertain, it's a pretty low risk entry point. So I'm going to go ahead and wrap it up there. This is David Morgan of morganreport.com. And as I started this weekly perspective, the reference I was talking about is right here, the Crypto Conspiracy Podcast number 24 with Kent Lewis. Again, I would say that it's worth your time to listen to what's going on. We show documentation as well as just verbalize what Kent has researched. Till next week, this is David Morgan signing off.